I'm glad I'm not heading to an airport anytime soon. Of course, it can be a fraught time to travel. We thought we'd take a look at airline stocks and how they might shape up in 2024. Our guest says that Air Canada looks well positioned for growth in the coming years, citing robust long-haul exposure. I mean, it's a big international player, the loyalty program, and premium cabin offerings. We're joined by Trent, Managing Director of America's Airlines and Latin Transports at Citi. Thanks very much for coming on the show.
Thank you for having me, and happy holidays.
Same to you. We appreciate you giving us the time. Air Canada, to start off with the loyalty program, why is that so important?
Yeah, absolutely. So when one looks at what these loyalty programs have done for the big network carriers, I would say there's a really important symbiotic relationship between the network airlines and the financial institutions, where one side is getting really good working capital tailwind and a way of de-risking their earnings stream by having more of this loyalty program, co-branded card revenue flow through the income statement. You know, the other side of the fence, I would guess, is quite keen to get information on loyalty program members and consumer data, which especially for the network airlines is probably going to be a lot more robust and possibly more interesting than it would be for a smaller airline. So we think all around that's something that's definitely good for the network carriers.
Tell us about the premium cabin offerings. I haven't flown very much lately. What is Air Canada doing in this area, and why do you think it's a good program?
Yeah, so they have an interesting position, essentially being, the only bona fide network carrier in Canada. So when one thinks about the trends that are impacting travel in Canada, you're actually seeing very similar trends in the United States. Post-pandemic, many consumers are no longer in the office 5 days a week, and that has affected consumer behavior, including the way consumers purchase tickets. So what's happened to that flow over the past couple of years? A lot of that flow has now gone towards blended business travel. So people that might be traveling for at least partially for business purposes, and then partially for leisure or personal purposes. The way that stuff gets booked, what we've seen so far is it's really tended to favor, premium economy, premium cabin type offerings relative to basic economy and rare cabin offerings. So when we think about those robust offerings for the various airlines in the Americas, it's once again the network carriers that have those offerings. The discount carriers don't really have those kind of offerings, with the exception of one or two hybrid airlines, for example.
And these, it's business class and luxury class is so expensive, but these are kind of a more reasonably priced treat when you travel, I suppose.
Yeah, and I think, in terms of business class as well, it's interesting to note there are very high airfares associated with those seats. Of course, they're also not particularly cheap to service. From a seat mile cost perspective, you don't have a lot of those seats on a plane, generally speaking. And then in many cases, not all the time, but in many cases, a lot of that flow is managed business travel, which entails the airline paying a big commission to the booking agent. And when we think about Economy Plus, they're less expensive than business class. They're more expensive than rear cabin, of course. But the tendency we're seeing these days is a lot more of the Economy Plus premium economy type tickets rather, they're getting booked via direct channel. And so even though the fare is not as high as business class, direct channel booking, the commission for the airline is zero.
Yeah, that's interesting. I know that some travel agents in Canada have been, I don't expect you to wade into this, but some travel agents in Canada complain that the airlines are squeezing them out. They're playing games with pricing so that they earn a very, very low commission. Has that been a trend in America as well? Are travel agents losing market share?
Yeah, so in terms of, what we've seen from the airline side of the fence, we actually have seen for quite a while now a migration towards direct channel. So this is not to say that airlines are never going to use travel agents anymore. Mm-hmm. But I think especially post-pandemic, the relationship is evolving because consumer behavior is evolving, including the way consumers purchase tickets. So these entities do get the benefit of seeing some of the airline's ticket inventory, and they will receive a fee, for those bookings. But in terms of the long-term trend, absolutely, we've seen more direct channel in the United States and in some of the Latin American airlines.
You also like Delta, the U.S. giant carrier. What have they got going for them?
Yeah, absolutely. They are best in class in terms of protecting their brand. So we can go back to the pandemic, for instance, when they were the very last major U.S. airline to unblock that middle seat when we were trying to keep people separated. They were the only major U.S. airline that did not dilute their equity holders, with the exception of a very small number of warrants that they issued to the U.S. Treasury Department during the height of the pandemic. When we think about how this story looks going forward, they're back to free cash flow generation, robust free cash flow generation. Those items I mentioned earlier in terms of de-risking their earnings stream, their co-branded card program is robust. They were at $4.1 billion in 2021. They're possibly going to hit $7 billion for 2023. International long haul is going very well. And in terms of that trend I mentioned with more direct channel sales and this consumer migration towards blended trips, Delta is very well positioned. So they continue to be our favorite U.S. airline.